Afternoon, everyone, and welcome this afternoon. Thank you so much for taking time out to join us. In terms of the format for today, you will be able to ask questions throughout the webinar. There is a Q&A tab that you will see on your screen, so please feel free to ask questions at any point, and we would really welcome that. We're hoping for this to be as interactive as possible. So I will start off with introductions of our panel members. In terms of our content expert, we've got Mr. Alwie Lester. Alwie was, as per the invitation, a former general manager at Eskom in Eastern, Northern, Western Cape, as well as the Free State, and is currently a strategic energy advisor. So welcome. Thank you so much for joining us. Joining him on the panel is Patrick Matidi. He is head of equity and multi-assets at ALUWANI Capital Partners, and Lloyd Ramakopia, a senior credit analyst with ALUWANI. Welcome to you guys.
Thank you.
Great. Thank you all. So I think we will go straight into it. Alwie, perhaps we can start with you. With just a lay of the land. So just trying to understand where we are currently with load shedding as it stands and what really got us here. How do we explain the situation that we're in?
No, thanks, Mish. So I think just briefly, 2006 was in fact the first load shedding in the country. It happened in the Western Cape. So we pioneered load shedding schedules in the Western Cape, and it's all related to the Kubuk Balt incident, where we lost the Kubuk units. At the same time, we also lost transmission transfer capacity, and the Cape itself went into darkness. The rest of the country was fine, but they weren't able to supply the Cape because there wasn't the ability to transfer energy from the north of the country into the Cape. And this is where load shedding really started us off in the country. It was a very good learning for us in the Cape, but I think what we didn't expect that this would become part of our daily life. It was supposed to be a once-off incident, sort of perfect storm. But I think where we're at now, it's much more than that. What we have seen, I think, over the last probably decade and a bit, is a degradation in the service, but it's also the performance of the plant. It's been very variable. The system itself, the national operating system, it is quite sensitive. So loss of equipment immediately almost translates into loss of megawatts and therefore into load shedding. In about 1998 at Eskom, I remember we had actually written to the minister at that time, Minister of Energy, to indicate that in a 15-year span, we expect to actually not have sufficient energy for the country. And I think the response at the time was that, Eskom itself wouldn't be allowed to continue to build new generation, but it would be a more open market approach. And I think that's been the right approach. I think it's just the pace at which we've done this. It's been too slow.
Okay.
And so I think it's caught up with us. You've got 40 power stations in the country, of which roughly half of them, in fact, more than half of them, are more than 40 years old. So you've got a problem in that you've got plants that are aging, where your OEM manufacturers no longer are available for replacement parts. You've got plants that have to be decommissioned. There's 13,000 megawatts that come off in the next 10 years. And that's 13,000 megawatts that we will lose out of the system that has to be made up by private generation. And the pace, again, at which a private generation is coming into the system is much too slow for the plant performance and also for the decommissioning that's taking place. So you add that to the fact that you're growing in this country, you want the economy to grow. We've got more and more people being given electricity. And in the poor performance of the plant, you're again at that point where you've got this perfect storm and you start to load shed.
Okay.
The intensity, I think, is just a lot higher this time than it was in the past.
Yes.
So yes, I think we've got here, I think, through a bit of slow planning and maybe slow execution as well.
Okay. So I guess if we then go into the future, what is the end state? And in order for us to get there, from a load shedding point of view, is the end state no load shedding? Or is it just significantly lower load shedding? But more importantly, in order for us to get there, what is required, whether it's from a generation point of view, a transmission point of view, or just, projects point of view?
Okay. So ideally, you want no load shedding. That would be the perfect space to be in.
Yeah.
But from what I see, I can say that I think we're going to have load shedding for at least the next 3 years. I think the stages will reduce, but I think from now to about March next year, I think we'll probably find ourselves in stages 4 to 6 consistently. And the reason for that, again, is that the generation capacity is just not coming on stream quickly. You do need more generation. I set aside projects being done by Eskom, the Kusile Medupi and Gulas. New plants not performing at rates lower than what plants that are 30 years old are performing. So you need the private sector to come in. Private sector will move a lot quicker. They will certainly put a lot of money into it. But you would need at least on average per year an additional 6,000 megawatts per year for us to just be able to get back to where we were prior to this consistent load shedding. The generation space is contentious. It's opened up in terms of, you have private sector players coming in. It's contentious because I think the decision-making process is quite long. If I look at the last few bid rounds, bid round 5, it took almost 2 years for them to get financial close on the projects. Bid round 5.5, I think we had quite a bit of a stumbling block. That was the emergency bid round, where again you had issues around EIA, financial close, and that made it quite difficult. I think bid round 6 has been a lot better than the previous bids. And I'm hoping that going forward with the National IPP Office, that the bid rounds do become a lot more efficient, quicker in decision making. But the next phase of risk, I think, is transmission. And I think we need to address that simultaneously with the generation problem. Because otherwise we'll just be load shedding because we can't evacuate energy, not because we don't have it. So you've got to start looking at the full value chain, transmission and then distribution, because in the end, it is the customers that need that energy. And if you don't get that, sub-transmission network also resolved, you're going to have the same issue again. So there's quite a bit of change that's needed in the industry. I think there's a lot more willingness, not just from the state, but I think from the likes of Eskom as well, to understand that they alone can't solve this problem. Private sector has to be involved to be able to get this problem resolved.
Okay. Patrick, do you want to add anything?
Yeah, perhaps you can just take us through, the last couple of months, just from an average kind of a skills perspective, because we had the new Minister of Energy coming in, and for a while there was no real commitment as to when we can expect loadshedding to end. There were dire warnings of, stage 8, possibly a grid collapse, brace yourself for a very harsh winter, and on and on and. And then somehow we kind of sailed through that. You look at the EAF, about 60+%, and some people say it's a bit higher. So what happened during the last couple of weeks and months? And then obviously the last couple of days, it seems like we're back to stage 6 and maybe, I don't know, stage 8, whatever. So that short window, what was the trick? What happened?
So when I looked at the data for the last probably 3 weeks, I think what was critical to see was, one, the energy availability factor did go up. And so why did it go up? If I look at the data, 2 reasons really. One is that there was less maintenance being done. Eskom does apply a winter maintenance regime, where because the demand is higher, they do less maintenance so that you don't have load shedding. I think at the same time, we must also understand that some of the big customers, the smelters and so on, they also plan their maintenance windows during the winter. Winter is also the highest tariff period. So it's the most expensive period in terms of your costs. Mm. So they plan their maintenance so they have reduced costs as well. So you had a good run because, one, you did less maintenance as Eskom. 2, the bigger customers were also doing their maintenance, so the demand was a lot lower. But they were also running gas and higher. So instead of running normally 2 to 3 units, they were running 9 units of OCGT for that period. Now the OCGT units, so the open cycle gas turbine units, those are predominantly to be used over peak periods between 5 and 7 at night and 5 and 7 in the morning. But in the last few months, we've been running them as base load. We've been running them throughout the day. So it does bring more megawatts onto the system. What you saw happen over the last few days was actually very different. One is that you had plant breakdown. So the system is quite volatile. And like I said earlier, you have one plant break, And if you look at the units in Mpumalanga, they're called 6-pack units. So they deliver anywhere between 650 megawatts up to 1,000 megawatts in those units. So when you lose a unit, you're losing at least 400 to 500 megawatts at a time. And that has a significant impact. Every 1,000 megawatts that you lose, you're into a stage of load shedding. And so what happened over the last week is that the number of units went down simultaneously, and they weren't able to recover those units. But they were already running the OCGTs as base loads, so there wasn't additional capacity to bring in. All the imports was already being used. Virtual power station was being used. And then you had cold weather throughout the country. Because of the cold weather, demand goes up. And so you've got this additional load that's being drawn. And that's put us back into stage 6. So yeah, a very volatile system. Small changes have a big impact in the system. That's what happened over the last few weeks.
Okay. So it sounds like, for the next 2 or 3 years, we should expect the current status quo, although things will start getting better. But in order for us to see a tangible improvement, there needs to be, I guess, will across not just government, private sector needs to come in a meaningful way.
100% correct. I think there are sufficient plans in place.
Yeah.
I think there are big projects that are actually, need to take off. But I think you need that will to execute those and get them onto the system as quick as possible, both from a generation perspective and from a network infrastructure perspective. I think if we address those 2 issues and we can get the balancing right, I do think that within the next 2 to 3 years, we'll see significant improvement in the system.
Is there sufficient monitoring mechanisms? So I think if I'm hearing you correctly, there is a will now, and there's a clear understanding of what needs to be done. But the monitoring mechanisms to ensure that we actually are doing it too.
So at a national level, under the presidency, they've established the National Energy Crisis Committee. And there's 6 streams that exist within that framework. And every stream is meeting on a weekly basis. So we form part of those streams as well. So there is, I think, sufficient attention to. I think where it becomes quite difficult is that a lot of the driving forces sit in the likes of an Eskom.
Mm.
And, you then depend on the Eskom generation to perform their maintenance, as per what they've given, as per their schedules. I think where you start to struggle is when there are outage delays, equipment doesn't come back on time. And a good example is Kubu. Unit 1 was supposed to be back in June. It's a 60-day delay. Now, 1 unit is not a problem. But the fact is that the 2nd unit has statutory maintenance in September. And if Unit 1 doesn't come back before Unit 2 goes out, we will actually have 2,000 megawatts out of the system simultaneously.
Okay.
So that becomes, a bit difficult to manage, where it's actually in the operations where you start to see some of these delays.
Okay. So unless either of you have a question that I'll be able to put you both on this one.
I've got one quickly.
Okay.
So what are you seeing on the demand side, especially Eskom's latest laws? Are they making alternative plans permanently? Still hopeful that they can still rely on Eskom going forward? And where I'm going with this question is, the end game to me seems like with those who can pay, perhaps some will pay. And Eskom still has an obligation to the broader population, where some of the areas do need some cross-subsidization. So that dynamic on the demand side, especially the larger customers, also play.
So you definitely see a shift from the bigger customers. I look at the mining houses particularly. They've made a conscious decision almost a year ago where they've started to look at their own energy supplies. They're starting to look at how do they actually generate for themselves. Sasol, the mining houses, some of the big consortiums, farming consortiums, are all starting to look at their own energy as the source. I think the question is always how reliable and how secure is the energy that we get from Eskom. And in the business space, people, they can only afford to take so much of a loss, and then they start to say, we need to make our own, we need to make our own plans. I think, unfortunately, you have a you have a grouping in our society that just can't afford to do those things. So you've got the lower quintiles that don't have funding for stuff like that. And so you have to have initiatives that look at the social impact and how do you deal with the poorest of the poor. So yes, I think for businesses it might be a lot easier to do it, although it's quite costly. I mean, these investments in your own systems are not cheap. But in the end, you are starting to look at the cost of your energy, the reliability of your energy, and obviously, if you're selling or manufacturing a product, what is the losses that you take during load shedding. So, in this province, as an example, in stage 6, the economic impact is roughly about 68 million rand a day. And so the farming community in the Western Cape has the biggest impact on them. They export about 55% of all agriculture is exported from the Western Cape. And so load shedding has got a massive impact in terms of just the export space that they have. Because once you lose that product, in that space, you don't get it back next year. It just doesn't work that way. So the impact of load shedding, I think it's far beyond just, the 4 hours that we see or the 8 hours that we experience. It's actually in markets in Europe, it's in markets across the world where we've lost that shelf space. And it's going to take a lot more to get it back. But there is a huge shift from bigger customers to actually moving into their own energy.
So, when we were discussing the end states, you made a comment that it's not just about generation, it's about transmission and distribution coming to the party. The private sector seems very involved in the first leg, the generation. How do we ensure that the other 2 legs keep coming to the party?
I think for me, the trick is going to be in concession funding, is to say that if we're going to make money available to, let's say, network infrastructure, that we've got to have conditions to that says, how quickly can we do this? We've just seen recently an allocation by the US TDA, the Trade and Development Agency from the US, and they've set aside $120 million for Eskom transmission. And we've had a similar discussion with them to say it's fantastic that they've done that. What you've also got to do is you've got to empower the private sector to do the same.
Yeah.
So get the private sector involved, start to open the discussion around the licensing, the construction, a full EPC, but not necessarily from the public sector only. Don't just let Eskom try and solve this problem of transmission.
Yeah.
Look at who in the private sector does build HV lines, high voltage lines, bring them to the party and start saying, what corridor are you guys prepared to then develop, at whatever cost? And the funding really is, it's just a mechanism, whether it's from the state or whether it's from private sector. I think once you start to bring that in, you can do it. But I don't think that you must focus on only the Eskom component solving the problem. I think it's got to be a lot more open in this market.
So perhaps, Lloyd, I could bring you in here with a question to you. From a credit team perspective, how do we think about Eskom as an investment? What are the risks that we take into account versus what do we deem as noise? So, what are real risks versus this is noise and therefore we shouldn't be looking at it?
Yeah, I think Alwie has touched on a couple of those risks. I think in particular, he's spoken about the power plant, the performance of the power plant. So that we consider to be a risk. I think he's spoken about the transmission asset as well. So that we see also as a risk. But I think over and above that, from a risk point of view, I think one of the things that we worry about is obviously the regulatory tariff. What I mean by that is, what Eskom typically applies for vis-a-vis what they actually get awarded. Now, what we've seen now with Treasury coming to the party and fixing the capital structure is that you have a scenario now where the capital structure is being fixed through equity. But ideally, we want it to be fixed via tariffs because Eskom is a Schedule 2 entity. It's listed as a Schedule 2 entity in terms of PFM, which essentially means that they have to be self-sustaining.
Okay.
So what we need to see is a scenario where we do not drop the ball on the pressure that Eskom has applied in terms of trying to fix and get cost-reflective tariffs. So we think that is a fundamental risk that needs to be addressed. I think the other risk that we are seeing is, volume, right? So what we've been seeing in the last 7 years is that, the sales volumes of Eskom have been declining, right? That's because you and I are moving away from the grid, corporates are moving away from the grid. And what does that mean in terms of the end state of Eskom? From an earnings point of view, will they have sufficient revenues and earnings in the future to service that? So when we think about, investing in Eskom, we think, well, in the medium long term, will they be able to service the debt that we provide? So we look at things like those. I think the other risk that's quite prevalent as far as Eskom is concerned is, the municipality debt, right? That has been thorn on Eskom's side for many years. And I think Treasury has come out with some proposals which are, positive, in theory. But I think there does lie an execution risk, in terms of, for example, the installation of prepaid meters. So we view that as a risk as well. Now, having taken all these risks into account, when we look at or when we do an investment thesis on Eskom, we look at firstly on a standalone basis. Can Eskom service its debt? We provide debt to Eskom. And we know that, based on, their financials, they've not been able to do that for many years. So then you have to then take a slightly different line in that you have to look at the shareholder. So what we do is we look at the shareholder, and in this instance, government or NT. But importantly, I think what we look at is the behavior of the shareholder in terms of willingness to support the entity. I think what we've seen in the last 3 years is that Treasury has been quite selective in terms of SOCs that they support. In the past, SOCs, NT would step in and assist any SOC, SAA, SAX, just to name a few. So what you want to see is, how has NT come to the party? And what we've seen with Eskom is that, they've been very supportive. You go back to the 350 billion rand guarantee that they provided to Eskom, which is the largest guarantee ever given to any SOC. You look at the 60 billion rand in subordinated debt that they put in back in the days. You look at the 200 billion that they've put in over a 10-year period, which on its own is an anomaly because Treasury budgets on a 3-year cycle. But in this instance, they went all the way out to 10 years. Again, what they wanted to do there was to signal to the market that we stand behind this entity. So we look at those factors and we take comfort from the fact that NT is willing to support the entity. So I think in a nutshell, so when we look at the thesis, we would take all those factors into consideration in making our investment.
Okay. And if we were to maybe move past Eskom a bit and just think about, the energy supply issue more holistically, how much of a factor has energy supply become when you think about financing sectors or other industries that are dependent on Eskom? So do you take that into consideration, and to what extent?
No, absolutely. At the end of the day, what that speaks to is, the ability of the business to operate, right? So what we would typically look at, we would look at the sector that that asset or investment is in, and we would look at the energy intensity of that sector. So, for example, agriculture, as Alwie has said, it's quite heavy on electricity. The mining sector equally. So when we look at those sectors, we would look at, well, the mitigants that management has in place. Do they have sufficient revenues in place, to cover the OPEX and the CAPEX that would accrue? We would also look at the ability of the entity or the sector as a whole to recover or recoup, the spend. And I think in this instance, if you look at the likes of the REIT sector as an example, I think it's a perfect example. what we've seen in the last 4 or 5 months with the results that they've released is that they've spent quite a lot of money on diesel, diesel and generators. But importantly, what they've been able to do is recover quite, a lot of that spent. So we would look at those factors as well in making decisions.
Okay, and maybe with that, Pat, we can segue to you. So if we look at the listed equity markets, what has been the impact on the financials of the businesses that are listed? Whether it's a cost impact or a revenue impact, has there been a significant impact? And if not, why not?
Yeah, Michelle, there has been a notable impact, both on the top line, which is revenue, cost line, which effectively means the profitability has been compromised. Lots and lots of stories in the media, as a land companies report, where the ongoing common theme is the impact of load shedding in these businesses. On the top line, the impact is just opportunities. So during load shedding, people don't move around a lot. The shops don't operate as they would normally, and therefore people just don't go shop.
Yeah.
And so you lose that sale. If you come back tomorrow, you're going to recover that sale. That person won't come back, so you've lost it for good. So that's a top line impact. Very briefly, cost line, as Lloyd has mentioned, you have to make a plan B. That is typically being self-sufficient to some extent. Either you buy a generator, you put solar panels on, you spend on ongoing diesel. We've seen quite a bit of that coming through. I think one of the notable cases is Pick n Pay. Things started off with Shoprite actually early this year, where they said the last year or so they spent about $1 billion just on diesel, which is a big number. Even though it's a big company, but also in absolute terms, it's a big number. In some cases, the guys really don't have much of an option, because even the alternative plans are not adequate for the businesses. So if you look at a company like Tiger Brands and some of the factories, you can't run a diesel operation 24/7. It's just too expensive. If you look at some of the landlords in the property space, you can't really put up generators or solar panels. You don't have the space. So in that case, you just shut down and go home. So the impact has been massive, but I think thankfully, where the guys have been able to mitigate those, I think from an investments point of view, balance sheet and income statement point of view, this year will be the base, and hopefully going forward, the impact of the numbers becomes less and less.
Okay. Do you think that the market has priced it in? Or do you think the market is being overly optimistic?
So it depends. So if you think of the market, let's go to May, where we had a perfect storm in terms of all factors that are playing against us. We had a load shedding at its worst with the prospects for a stage 8. We had a flurry of bad economic numbers, bad company results. Throw in Lady R in the end of the hand, and then suddenly the price of the country, as reflected by the currency, was at 19. So you could see that there was a shift in risk appetite given those factors. Clearly, load shedding is one of those. So we saw markets selling off quite extensively. Yes, they have since come back now in June and a little bit in July, but in my mind, there has been a bit of a step change where, year to date, we've seen foreigners selling off. A lot of that capital is not back yet because some of these issues are still in.
Yeah.
So I think that the risk profile has shifted, and some of it probably structurally, but some of it is cyclical as things are sort of influencing forward.
Okay. I see there is a question from the audience, and perhaps we could deal with that before we carry on. So the question is, Eskom's trouble will not be resolved anytime soon, and the utility has forecasted that the load shedding will continue until 2027. Firstly, is that a realistic forecast? And then linked to that, can we economically survive till then, given that the significant losses that we're experiencing every time we experience load shedding? So I will open this up. I think Alwie, if you start, and then
no problem.
Can...
So yeah, I think 2027 is quite optimistic, to be quite frank. I think the window is a bit short. I think we'll have load shedding for a little longer than that.
Okay.
I think in terms of alternatives, again, I think economically, people will start to naturally, the market will start to close, the private sector will start to close that gap naturally. And they have already started to do that. I think if I look at it from a sort of provincial and local government perspective, already across the country, the different provinces are starting to formulate their sort of teams around how to deal with it in their provinces and in the municipalities as well. I've met with Northern Cape, Gauteng, we have similar teams to what the Western Cape has. We've shared plans, we've shared templates on what we're going to do. And a lot of it has huge dependency on the private sector and the local municipalities being involved. But I think they are doable projects.
Okay.
I think some of them are fairly quick, short-term hits, a little pricey if you ask me, but I think there are ones that in the longer term are quite sustainable. So I think particularly Gauteng, Western Cape being the two sort of major sort of economic hubs in the country, I think if they take the lead, I think a lot of the other provinces will start to follow suit. So I don't think it's all doom and gloom. I do think there's an opportunity for us to get out of it. I think any additional national capacity that we get will be a bonus, but I think for the most part, you will start to see private sector megawatts coming on board.
Okay. And then I guess Patrick and Lloyd, the second part of that question, can we economically survive till then? Given, like you've said, every time there's load shedding, costs go up for businesses. And these are listed businesses with very strong cash and balance sheets, right? What about your medium-sized businesses? Let's not even talk about your SMEs that have no cash reserves to deal with this problem. How do these businesses and therefore growth, and how does it all pan out?
Yeah, I think in aggregate, the growth outlook for the economy continues to be bleak. For the foreseeable future. So that part continues to be a worry. And then if you sort of segregate and then you look at the different sectors, absolutely, if you look at the SME sector, I think the liquidation stats are not good for me.
Okay.
So businesses just are falling over because either it's load shedding or their markets have disappeared because there's no buying power. So that trend, unfortunately, appears to be well entrenched with no real plans or mitigation that I can see can reverse that. So for me, that's a bigger worry because that's an area of the economy where you're supposed to see a lot of growth in terms of employment opportunities, especially given our challenges on that front. But from a listed point of view, as I said earlier, you've got this base now. So those who can afford, they've already spent, then hopefully going forward, you're just going to see that impact the balance sheet going forward. There may just be perhaps on top line point of view, just given the growth dynamic that is in.
Okay. So we can expect, obviously, growth to be.
I think growth will be pedestrian. Definitely, if we plug in 2%, it'd be great. Remember, we are still below pre-COVID levels.
Yeah.
So this trend has been entrenched for a while. Just COVID made it worse, and then now load shedding is just pushing so that different.
So given all these increased risks, when you are evaluating companies, are you putting up the cost of capital, so the return expectations that you want from these companies? Or are you, because we're long-term investors, not factoring that into the equation?
Very interesting question. We actually had a discussion earlier today on that last few sort of weeks and days, because it's no doubt that there has been a bit of a step change given a lot of these factors in terms of the risk appetite of investors. Right? As a result, the required return has notched up a little bit.
Yeah.
And you just need to look at foreigners what they're doing in terms of exiting. So you can see that the appetite has shifted quite a bit from that perspective. On our side, we tend to be very long-term based. There is an element of what we're going through now, which is cyclical, therefore should reverse.
Yeah.
But I can't help but wonder, to what extent is there a structural issue where perhaps that stays with us for long and therefore warrants also a step change from us. So it's a conundrum that we are grappling with, certainly dislocating, but we're not just changing and adjusting things. We're looking at each and every investment case on its own merits and then seeing to what extent that we're able to put plans together, invest for the future, and therefore sort of shield themselves from some factors. Then which companies are ultra vulnerable, such that even if you adjust your required return, you're going to get much, just because structurally they're in that space. So it's more selective, based on each company. So
Alwie, the question that came through the audience, where the question was posed, is 2027 realistic? And you said no, it will be a lot longer. What if I had to put you on the spot and said, give me a timeline or a year that we will be over load shedding? Is that too simplistic, or can you even give that timeline?
It's difficult to respond to the exact sort of timeline, but I would want to guesstimate that if I just look at the track record of us being able to execute projects, then I say we are by at least 3 years.
Okay.
So if I look at, Withdrawn 5, took us 2 years to get to a decision to approve vendors, and that's before they even executed. And so my view is we are by at least 3 years when we talk about, we'll be out of this space.
Okay. So then, Patrick, I guess coming back to you, we're saying that this increased risk or cost is going to be in the system the next, if we say 2027 plus 3 for the next 5 to 10 years. Does that not mean that you need to adjust your cost of capital?
Yeah, I mean, given that outlook, certainly you do.
Yeah.
Because even though we're long-term investors, not sky's the limit.
Yeah.
So there is a window within which you need to make a plan for clients. And for us, it's within a 3 to 5 years.
Yes.
So certainly then it does bring the discussion back to the table, guys. I think probably should be looking at this. And that's that's the risk-free rate, which is typically a bond yields.
Yeah.
So that's the starting point. Then what additional risk do you want on top of that?
Okay. And then Lloyd, maybe putting you on the spot here. Given the yields that we're currently getting, from Eskom paper, do you think that sufficiently captures the risk? That is, the risks that you highlighted in the beginning, or not?
No, I think it is. Because we've seen paper that prices above where government is.
Okay.
But when you think about it, the reality is you're taking government risk.
Exactly.
So in my mind, I would say that the yield that you're getting does capture that risk.
So Patrick?
So just to add on my previous point, so even though the outlook may be dire, remember there will always be businesses that are best placed.
Yes.
So there will be winners. And our jobs as investors is to try and find those winners someday. So yeah, in aggregate, things will be great, but trust me, we'll look back in 5 years' time, there will be others winners that would have made decent plan, put mitigating plans in place, and actually capture the market itself.
Okay. And I'm going to put you on the spot now. If you were part of the Eskom board, and given everything that we've discussed and everything that needs to be done, what would be your requirements from a CEO and from the overall executive team at Eskom? So what is it that you would be looking for?
I think first, obviously, is to try and make sure that we've got sustainable plant when they return. So what we're finding in the generation space is they come back for about a couple of days or a week or two, and then that same plant is then back out. So the fixes are not sustainable. So in the generation space, it's definitely to look at more permanent, sustainable solutions for those problems that we have. There are things that occur every day. You see that there are things like you've got ashing that takes place, etc. And that's the normal process in the power station. But I think where you start to be concerned is where you find the same plant repetitively going out, week after week. And so that should be something that they should be focusing on. I think the one is that. The other one is that the system operator needs to be managed more dynamically. And I want to say we're almost at the age where we've got to start speaking about managing the system using AI, as opposed to the way we've been doing it in the past. The whole regime has been set up on energy flowing from one part of the country to the other. The system's opened up. You've got generation all over the country. There's IPPs throughout the country, plants, generators everywhere. Energy is being fed into the system from all sorts of points. The system that exists hasn't been able to manage that flow of energy back and forth. I think that's one of the things that we need to start to address, a more dynamic system operator that is managed on, like, again, an intelligent system. So those for me would be critical in the generation space. I think at the same time, the unbundling is critical. You need to separate generation, distribution, and transmission in Eskom, so you can get the cost drivers clear, so you can start to see what is the two tariffs in each one of those. Municipalities are able to buy at a transmission level and therefore don't need to pay a distribution cost. Big customers, in my view, in the future, if we get a market operator in place, will be able to buy at that level as well. So I would definitely start looking at an independent system transmission operator, a market operator that needs to come in, and then look at Eskom as a player in a much bigger energy space and not the only or the player in the space. So I would want to start to structure that business to go into the open market. I do understand from a government and from a shareholder perspective, they'd want to hold on to one or two components of it, and I think the natural one would be transmission. You know, it's the network, it's the roads, it's the wires that actually move the energy. But you don't necessarily have to be in control of the generation or even the distribution. So for me, as if I was sitting at the board or even as a CE, that would be the areas that I would pay attention to. There are the existing ones. You need to manage the debt issues that you have with municipalities. You've got to watch your costs. So, 37,000 people in Eskom, you need to be checking, do I still require 37,000 going into these new structures? And that will affect the tariff and affordability of electricity in the next 10, 20, 30 years. There's been a lot of talk that, yes, we are still one of the lower priced energy countries in the world, and that's true, but that doesn't translate into affordability in this country today. So yes, maybe in dollar terms we're cheap, in rand terms I think still expensive for the person on the street. So I would focus on those factors to try and get us to an affordable, sustainable energy solution.
Okay. And in terms of the transmission and the generation, have we heard of any projects that we can put a line in the sand in terms of the next 12 months, 18 months? These are the improvements that we'll see in that side as well, or is that still very much up in the air?
So some of the maintenance projects I can comment on is that we've got Kusile units coming back and Medupi units coming back in December. And between those units and if you have the Kuberg Unit 1 returning, you should see close to 3,000 megawatts coming back by December. So 3,000 megawatts effectively should take us at least down 2 to 3 stages of load shedding. The assumption is they come back sustainably. But those are some of the repair projects that they have. There is some emergency projects that they are busy with as well. There's been some work, long-term work done on Majuba, but that is at least a 12-month window before Majuba returns to service. I think from the private sector, there's close to 6,000 megawatts in withdrawal 6. Whether all 6,000 gets approved, I think that depends on the National IPP office and whether they achieve financial close. But if you take that 6,000 megawatts and let's assume it does go through, then in the next 18 months or so, we should see additional megawatts coming onto the system as well. From a transmission perspective, there's been a commitment that they want to build an additional 4,000 kilometers of line, and that is to evacuate the private generation from IPPs to the north of the country, but also then to strengthen some of the existing substations across the country. So, increasing transformation capacity, etc. So there are some projects that have been approved in what they call the Transmission Development Plan, and that is the plan for the next 10 years. Some of them have got timelines that are set for the next 18 months, 24 months, etc. But the sort of significant ones only really come into effect in about 24 months to 36 months, where we start to see bigger transformation capacity, some of the big substations, MTSs, being upgraded in the country. So there are some plans, and like I say, there are some private sector plans that also fit in quite well.
Okay. Patrick, if I could come back to you. You made the comment that there will be some winners and there are some losers. It's not all doom and gloom. When you think about that, is that at a sector level? So there are specific industries that will do better, or is it at an individual business level? So businesses, I don't know, with strong balance sheets. Yeah. So how do we think about that when you're investing?
Yeah, ultimately it has to be at a business level because that's where we invest. And yes, there are some sectors that are better placed compared to others.
Yeah.
Within those sectors, still there will be winners and losers. And then what we're seeing with this call it a crisis, is that it's opening up and creating opportunities for other businesses. And so in that space, we need to look out for those sort of winners and try and avoid the guys who be left, as investors or clients.
Okay. So, if I had to think about the equity investment process, this would very squarely fit into thematics. So we need to think about thematics, and you bring that in when you think about.
So you think of thematics. So this is a big theme for SA, and then within that, then say, okay, who's better placed to take advantage of this thing? And then also look at valuation. Make sure that you're not overpaying because the theme is already embedded. So for us, it's about playing those three elements. It's valuation, it's quality, and obviously mathematics.
Okay. And I see there's another question from the audience. So the question is, alternatives, I guess, especially solar, seem to be quite a hot topic at the moment, and we've seen a large number of suppliers that are, that have come through and are advertising their services. Not all suppliers are equal, right? Some are more reliable than others. Is there a standard or a guide at a government or a national level that is in place to try and manage this, or are businesses or even individuals, I guess, left to their own, making sure they do their KYC on the businesses that are cropping up?
Okay. So there are standards that exist for solar installations. So you would see the city of Cape Town as an example. If you want to put solar onto your residential property, they would say it has to be a tier 1 installation. So that refers to the quality and also the acceptable sort of panels that they will take. Okay. So there is, it's called the tier 1. So the different tiers really just vary in terms of the quality, the output, and the yield. Then for installation, and this is the big issue, and I think last week we had this incident in the Cape of Vodacom, but there are approved installers. I think the first thing to say is you need to make sure that the guy is certified that's doing the installation. Now, how they're certified? There is, in fact, a structure that does certify installers. They get trained. Salitech, which sits out at Bellville South, which forms part, I think, of CPUT. They actually do the training, and they've got some of the guys that then get approved at Salitech as authorized installers. But also you should find, if you are using an electrician, again, a certified electrician, where you can get a COC for the installation. So all residential installations, in fact, should have COCs. The commercial ones are at a slightly higher level, and normally you would have companies that will do those installations, and they would also have to be certified installation. So this is just to say that they've used the requisite quality of material, that you're not installing using lower grade cabling, etc., or that you're using an unqualified installer to actually do the work. Nationally and provincially, what we do have is within the Department of Economic Development and Tourism, there are portals that exist where we do actually put vendors and installers, we make them available to the public. So you could actually see who are people that have been approved and who have been certified. They're running a very similar process nationally under, I think it's Minister Patel, where they're looking at what's called the ease of doing business, where they also then try and get installers and vendors to become more transparent and available to anyone that inquires.
Yeah.
Just to add, the one thing that we see is, I think we should encourage people to inquire with their insurance companies.
Yeah.
So once you've done, all the steps and got all the piece of paper, go to your insurance company there and then. Say, is there anything else missing? Because you don't want to think that you're covered. Something happens, then someone says, "Oh, but you missed this, so there's this missing."
Yeah.
So I think it's important to go all the way through, especially on the cover side, because the last thing you want is to think that you're covered. Only to turn out that in just a stamp on the some paper, it's not there.
Yeah. So maybe one further question from me to you, Alwie. In terms of the projects that you've listed from a generation capacity point of view, maybe I'll go back to my initial question. I fully understand that there's a longer lead time that in terms of delivery that we're seeing, but in terms of the monitoring of these projects, particularly now if we're getting private sector involved, monitoring of the actual projects coming through, is there a standardized approach to that, and is there a centralized approach to ensuring that these projects are being executed and it's not just a time delay? Because time delays we can deal with, but whether it's a quality delay, you don't want another situation where you think you've got a project in place, you think you've got capacity, only to have breakdowns 6 months, 12 months down the line because there was quality issues. So how does one ensure that's happening, and which agency is responsible for that?
So within the Eskom space for their generation, they've got a maintenance team, and that forms part of generation maintenance. And they almost report back on a daily basis. There are production meetings every morning at Eskom at 7 around which plants have got, have breakdown, what plant is available, and that's how they do the forecast for the day ahead, the week ahead, etc. So within Eskom, there's a fairly well-structured, managed response to how to deal with their generation maintenance. Projects that sit within the national REAP process, which is really sort of the bid rounds that we've been on. They are monitored through 2 mechanisms. One is through the Department of Mineral Resource and Energy, DMRE, and then specifically in the National IPP office, where projects that have been allocated get tracked and then monitored at that level. The private sector projects, I think obviously not as simple to monitor, but I think again, the driver there quite easy is the sooner the private sector get these projects done, the quicker they can actually get into the PPA, and the quicker they can start to see revenue flows. So I think the private sector naturally sort of monitors themselves because there's always a return that needs to be coming in quite quickly. I think with the sort of national projects, it's a little difficult in that, the private sector, if it is an IPP that's providing the solution, they literally come in sort of at month 18, 24. So it's that first 18 months that you need to monitor and pressure quite a bit to get things through the processes. Once it moves into construction and execution, then it goes very quickly. So we've seen projects, that have been sort of shovel ready for a while. And now you need to get into execution, but it's taken us maybe 18 months to get into sort of shovel ready. But once the guys start executing, if I look at a typical solar project in this country, we can do it in about 16 months in this country. So
that's great.
Solar and wind are by far the best priced technologies at the moment. And they're also the quickest to do the turnaround. But there are some other things that we want to consider at the moment, like long storage, battery options. So even if you had solar and wind, how do we retain that energy over periods when we need it, and not just when the sun's shining?
Maybe just on that, Alwie, how do we think about transition between, fossil fuel into renewables? We've seen in the US, I think there was a US Senate discussion on electricity, I think last month or so. And one of the biggest risks that their equivalent of NESA identified was that the pace at which the US is moving from fossil fuels into renewables poses a risk for energy security in the US. How do we intelligently make that transition here in SA?
So this, the sort of point you make fits in 100% with this just energy transition that's taking place in the country. And so I think one of the lessons that we need to take from both Europe and the US is that we cannot do this at a pace that puts the economy and the country at risk. Over 80% of the energy in the country is fossil fuel. So for us to try and make that switch very quickly is high risk. We don't have the ability and we don't have the capacity in renewables now to replace that 80%. So it would have to be phased. I also think we'd have to take a balanced approach to it. There isn't yet technology available where we can talk about long storage facilities. So if you had wind and solar, you could have storage for maybe 6 hours. But if you want to replace 80% of the fossil fuel, which is really dispatchable energy, you're going to need a lot more storage capability within 6 hours. So I do think that we'd have to pace ourselves. We must not make the mistake of trying to do this extremely quickly because we are under pressure from whomever to do it. I think we've got to take a sane approach to this. We have to transition. I agree. We want a decarbonized economy. We want smaller footprints. That's definitely important for all of us. But I think we've got to do it responsibly. One of the things that will help us is, as we decommission those Eskom plants permanently, we've got to start to balance that out with exactly the same amount or more of renewables coming in. So if we're going to say 13,000 goes out over the next 10 years, we've got to say 15 to 18,000 of renewable comes in over the next 5, 10, 15 years. We shouldn't say 13,000 is out by 5 years and then we don't have the renewables available to help us. Because all we're going to do is put ourselves into load shedding again. So I think it has to be a balanced approach. And it can't just be driven by what's happening in the rest of the world. We've got to look at what we need in this country.
And that's a very pragmatic way to think about it. Patrick, do you have anything?
Yeah, maybe I'm being a bit naughty, but between the three of us here, I mean, again, we've had commitments with regards to our family in the sea. So I think at some point there was even a time welcoming the short list. No names mentioned, but any idea when we can expect some announcement?
You are being.
It's just three of us.
Yeah, it is, isn't it?
No, so the expectation was that there would be an announcement actually earlier this month. I know that the shortlisting is down to 2 people, 2 individuals. I expect we'll probably find an announcement in the next. I suspect in the next few weeks. I think you've also just seen now that the contract with Jan Overalls has been scrapped. So Jan has left Eskom, and what he was doing his role currently was to then assist the existing or the acting CEO, which is Caleb. From a technical perspective, because Caleb's the CFO, and so from a technical perspective, you would need some assistance. So I think the urgency to appoint the CE now becomes a bit more critical because you've taken on, the specialists that you had for technical. I suspect in the next few weeks we'll get that announcement. We'll get that announcement, but I do know it's down to 2 individuals.
So before Patrick becomes even naughtier, I think we need to end this webinar. Alwie, thank you so much for coming through and sharing with us your insights. It was very, I think even the audience, we received good feedback, so it was very insightful, and we will definitely continue chatting with you in the foreseeable future.
No, it's a pleasure. Thank you for inviting me.
Great. Thank you.